note taker in the meeting, so I can send you a link of the entire video transcript, all of that, if that's easier.
Okay. So I'm recording as well. Thanks for taking the time this morning. Um, I saw some information out about your program, just to kind of give you a brief rundown. So a couple of years ago, I started networking and collaborating with credit union CEOs, and it was mainly for CEOs and didn't really take a whole lot of traction. So last year, I kind of rebranded it from Credit Union CEO to Credit Unions Forum, kind of expanding it to pretty much all senior leaders within the credit union space.
Yep.
And it's kind of taken a little bit of a turn to even going outside of collaborating with senior leaders in credit unions on struggles they have and finding ways to be able to collaborate on different hurdles they might have to going outside of credit union staff and talking to other people within the credit union space support services to find ways to create better member engagement, finding ways to do strategic planning, finding ways to increase revenues, reduce expenses, all different types of things, that credit union, staff face. So, real quick before we kind of get started, why don't you, kind of give us your story, who you are, and how your company came into being.
Sure. So James Chemplavil, I'm the founder of Salus. Before starting Salus, I actually worked for 16 years underwriting high risk corporate debt at a company called Barings here in Charlotte, North Carolina. Um, I didn't really have a plan to start a business. I was kind of planning to be a career investment analyst at Barings,
Okay.
but kind of had a change in my path. Um, so I've got two boys. They are 12 and 11 now. But when my oldest was 18 months, we had him, my wife and I both worked. We had him at a daycare down the street from our house. And come to find out one day that one of his daycare teachers is leaving, which in Charlotte usually means, hey, I got a better paying job at one of the public schools or one of the private schools. So that's a good thing. So went to say, hey, congratulations, where are you going next? And what she told me kind of stopped me in my tracks. Um, Turns out she had gotten into a car accident the week before. And even though she had car insurance, she couldn't afford the deductible that she needed to pay to get the car fixed because she didn't have enough cash. And she tried to take the bus to work, which in Charlotte isn't the most reliable. And after about a week of being late, the school told her, look, as much as we love you, if you can't be here on time, you can't work here anymore. So it wasn't that she was leaving the job, she lost it. And it really wasn't anything she had done as an employee. It was just she couldn't borrow money when she needed to. And again, coming from a different part of financial services, I was confused. I thought, this is why the banking system exists. A young woman with a steady income, certainly she could borrow some money. Um, Turns out that as I did some research, that's not the way it works for young people, especially young people that don't have prime credit scores. You fall out of traditional credit boxes, you don't have access to manage these short-term kind of financial emergencies, and they turn into financial disasters. Thought there was a better way to get people like Wendy access to credit, and so that's how Salus was born. We started with our first product, which was designed to help underwrite members that don't have a prime credit score using transaction data to help them get access to digital automated microloans. As we started talking to credit unions, we realized that as important as the underwriting part of the process was, the ability to integrate with existing systems and create a true 0 minutes of staff time process was maybe as important to being able to get these microloans out to members when they need it. And so that's what we built. That was our first product, was digital automated microloans underwritten using transaction data, 100% digital, 100% automated. And we've expanded from there to earned wage access, which is a different type of microloan, predictive analytics. And we actually, it's not on the website yet, but we are actually a data furnisher that allows us to help credit union members report on-time rent payments to the credit bureaus. They can increase their credit score and get closer to an auto or a mortgage loan down the
Okay.
line.
And so that's an added service that you have going to be updated on your website for
Yeah,
members.
Yeah, so what we have right now is, again, we started just around this microloan product idea of let's just help people get access to emergency credit. It's a big problem. And it started as, oh, people go to payday lenders and pawn shops and get title loans and all these kind of predatory options. And what we've actually found is that's not the only threat for a member that needs this product. The real threat now, or an equal threat, is neobanks that operate online that can operate these types of loans very easily for a member. And they're offering that member that loan not because they just want to give them one loan. They're trying to steal that member so they become, instead of a credit union member, they become a Dave member or a Chime member or a Cash App banking member. Um, and so we see that in the data. We work with fintechs and credit unions, and we know from our data about 77% of credit unions have members online applying for these types of microloans
Really?
away from the credit union. And so, as much as we think about kind of better digital interfaces and better marketing messaging, one of the things we try to communicate to credit unions is one of the best ways to start engaging with younger members is to meet them where they are with the products that they need right now. And your own data is telling you what they're looking for because they're getting it somewhere else because they can't get it from you.
So potentially credit unions could be looking at having this type of service to help with member retention as well.
Yes, that's the way we talk about our entire platform is these are products that are not just designed to help fill a community need, help an underserved member, but it's really about member retention and turning them into a member for life. That's
Sure.
why our tagline is turn Gen Z into members for life, is because these products are designed to help members where they are and then help them where to get to where they want to go next.
Oh, exactly. And early on, if they create that relationship with that credit union, now you got a member for life.
That's exactly right. We did with one of our early partners, we did a case study and we looked at everyone that got a microloan from this credit union. And what we found was that 65% of microloan borrowers, which sometimes people think, oh, they're in rough financial straits, maybe we don't want to, maybe it's not worth it to help them. What we found was 65% of this credit union's microloan borrowers increased their deposits at the credit union 1 year after they had gotten a microloan. So it wasn't
Okay.
about just helping them at that one point. It really built a relationship that we saw in the data. And the best part was it was 74% of millennials had grown deposits at the credit union, and 90% of Gen Z members had grown deposits at the credit union. So
Really?
it went from for that credit union, it went from this is a product that we want to offer to the community to, hey, how can we offer more of these to our younger members so we can kind of get them on the right path with us?
Well, when we talk about these small dollar loan programs, why do you think so many financial institutions have struggled to offer those types of loans to be profitable?
So there's really two things that hold it back. The number one thing that I'll mention is just kind of the administrative burden. The size of the loan, and microloans are $50 to $2,000 in size. That doesn't change the back end work that needs to be done to facilitate that loan. It
Right.
doesn't change the intake of the information. It doesn't change booking that loan to the core. It doesn't change setting up auto pay. On average, we found that credit unions that do this manually spend 45 minutes of staff time per microloan that gets funded. When you spend 45 minutes of staff time, it's a small dollar loan. Even with the interest, it's very difficult for that loan to be sustainable economically, even if they pay it back on time. The second piece is how do you underwrite this loan? 95% of microloan borrowers don't have a prime credit score, but that doesn't mean that they're not credit worthy. What we found in our data, because we don't look at credit score, we look at transaction data and use cash flow underwriting is we found that 95% of microloan borrowers that repaid on time didn't have a prime credit score when they applied. So it wasn't that they weren't creditworthy, it's just no one had given them a chance to prove that they were creditworthy. Those are kind of the two buckets of why microloans have been tough for credit unions to offer historically.
Um, this is kind of a meet and greet. I mean, I've got, some, um, I guess, key areas of questions I'd like to ask, but since you brought that up, I've got a quick question. Um, besides credit unions forum being, a passion project of mine, my day job is, a credit union CEO. And so when you were talking about those types of loans specifically and looking at underwriting them, I know we have tiered pricing, like for car loans, as an example, we've got our A plus, our A minus, C, and D types of underwriting where based on risk, there's going to be different interest rates. So are these types of loans just all underwritten like under the same interest rate, or are there tiered pricing on these micro loans as well?
So we generally leave that up to the credit union to decide. What I would say anecdotally is that
I guess
based
my
on
question is, what have you seen with other credit unions? How they
they're
price?
offering it, they're offering it equal pricing for everyone
Gotcha.
that's approved.
That was kind of what I was guessing. It was just that product, that pricing. If it falls into that category, then that's what they're looking at, just to make life, I think, a little easier.
Correct. And when you think about, a $400 4-month loan, even if you charge the max credit union allowed interest rate of 18% or 28% for federal credit unions that can use the PAL2 construct, that's still not a lot of actual interest in dollars that the credit union is slated to earn. So the more important thing is, are you making the loan to a member that's going to pay it back rather
Right.
than what the relative interest rate is?
Yeah, these loans are small dollar amounts, so it's not going to, be huge amounts. Um, Now, you kind of touched on this, but one of the biggest challenges credit unions face today is just basically staying relevant with younger members, and I find that here as well. That's one of our main things that we try to do is get out in front of our younger members. How does your organization help credit unions build those relationships with the younger borrowers?
So we work on a B2B basis with the credit union. And what we can provide when a credit union uses our platform is some of the marketing around how you would set this up on your website, how this would look in terms of what you would talk about with a member. But, and I can show you really quickly um, what that looks like. So this is a credit union that we currently work with,
So do you have
LFI.
credit unions that have integrated this onto their mobile app as well?
Yes. So
Okay.
if you look at LFI Federal Credit Union, for example,
Uh-huh.
they went live with our microloan product. So they have on their external facing website and inside their digital banking app, they have information about what a microloan is for, the key terms that are relevant, the specific eligibility requirements that most of these are set at kind of a standard level, but then there are individual things that credit unions may tack on. And then from there, the member applies for a microloan by clicking on the button. And through a core integration, we now facilitate the entire application process from I would like a microloan to the loan is approved, funded, electronically signed, and booked to the core through a white labeled experience that you see on the screen here. From a marketing perspective, what we see is the most effective for this product is running a banner ad on the front of the website. We saw a credit union that went live during the first week of November when people were worried about the government shutdown, SNAP benefits, et cetera. They ran a banner ad on the front of their website and they got way more volume than they anticipated, which was a good thing for them. They were excited about the response. And once you kind of let members know through a newsletter, email marketing, putting stuff on the website, we generally see a pretty standard level of application volume because members are looking for this solution. Um, my favorite example of this is on New Year's Day this year. We saw a young woman, 27-year-old woman. She needed help with her rent. It was 3 p.m. on New Year's Day. So there's not a bank or a credit union open anywhere, but
Wow.
she needed rent due on the first of the month. She went to her credit union, got her microloan in 4 minutes from I need money for rent to funded and in my account. 4 minutes is how long it took based on a fully automated process. That's member service that can't be replicated.
Wow. Oh no, I would 1,000% agree with you on that. How does your platform integrate with existing core systems?
Yeah, so we integrate with the core processor so that we don't necessarily have to integrate with a digital banking system, and we don't have to integrate with a loan origination system. That allows us to, through a narrow scope of our integration, make sure that we can get access to the data that we need to authenticate the member applying, get access to the information that's relevant to the underwriting, and if that member's approved, generate an electronic loan agreement that's electronically signed, put that in the correct storage place, book that loan to the core using the proper terms, set up automatic payments, and disperse the funds for that microloan into the member account via an internal funds transfer.
Oh, wow. Yeah, I'll probably have a question for you on that. I was I was sharing with my vice president of lending that you and I were going to be having this conversation. And, they'd said our core has a one-click program, but I have a feeling it, it, it's not the exact same. It's probably more traditional underwriting type of program. So I think you guys have something there. Now, you guys use transactional data rather than relying on traditional credit scores. So how does that change underwriting decisions for members with, say, limited credit history?
Yeah, it actually gives them more access. It's a more inclusive solution. What we've seen, and on our platform, since we went live, we have underwritten a little over 15,000 microloans on a fully automated basis to borrowers across the country. What we see in those microloans is the average approved borrower has a credit score, I should say. It's not FICO, it's Vantage 4.0 in the 570s. So 570s for a credit score is not something that's typically approved in normal credit boxes. But by looking at transaction data, we can look at members and see the most important thing about that member, which is what is the thing that is creating this financial need, and do they have the ability to pay it back based on the data that we can evaluate in real time? And what I like to say about cash flow underwriting is when you look at the cash flow data of a member who's got direct deposit at a credit union, you can see a difference between a person who consistently spends less than they earn, but has had a sudden drop in the last month in income or a sudden increase in expenses. That person looks a little bit different than a person who maybe consistently spends more than they earn. And you can see that trend continuing over several months. Cash flow underwriting will look at those two people very differently, even if they have the exact same credit score.
So your system will actually analyze that? I guess that was one of my questions too, is if it happens, it seems like your system works, fast. So what about like income checks? I mean, are they having to upload their pay stubs or how, is there any verification on income or had that previously been done?
Important question. So typically, microloans are available to existing members at a credit union. And typically, and we would highly recommend this, eligibility for a microloan includes having direct deposit into a credit union checking account. That
Okay.
happens for two reasons. One, from an underwriting perspective, when you have direct deposit into a checking account at the credit union or into an account at the credit union, you have a much clearer sense of what that person's financial picture is short term based on the inflows and outflows in credit union accounts. The second reason is when someone has a direct deposit relationship with the credit union, that means they're a deeper relationship with the credit union, and it generally associates with higher repayment rates of the microloans that are made.
Yeah, I kind of completely went out of the box there a little bit on that one when I was thinking, as you mentioned that. I mean, clearly, when you're signing up new members, um, when you're getting them to get that direct deposit signed up, you're um, you're creating a stronger bond and relationship with your institution too. So that just early on could help, building those relationships. Um, Now, small dollar lending historically has, raised concern about credit risk. What has the performance of these loans looked like across your credit union partners?
What we tell credit unions, because we have risk parameters and tolerances that the credit union gets to choose from. So some credit unions want to run a really low risk program where they're focused on capital preservation and making sure they don't have credit losses. Other credit unions are focused on maximizing the reach and impact, and they're okay with taking some credit losses. What we generically say to credit unions is try to plan for budgeting purposes about a 4 to 5% charge off rate. But what we've seen in practice, and we need more data to confirm this, because we're always looking for more data, so we've actually seen charge off rates that are realized be much lower than that. But we're waiting on a lot more data to confirm that. But our general rule is to tell people budget for 4 to 5%. And remember that the point of this product is not net interest income, because in all seriousness, any credit union that turns on a microloan program, this will never be more than 1 to 2% of a loan book at any given time. So it's not really going to move the needle in overall credit losses
So
one way or the other. It's about building and deepening that member relationship with someone
relationship.
who's at risk of going somewhere else.
Gotcha. So, one of the big things with credit unions is, financial wellness, financial literacy types of programs. Beyond lending, how does your organization help credit unions improve member financial wellness and long-term stability?
So the platform product that we have that most associates with financial wellness programs and just being able to check on the financial health of a member is our predictive analytics platform, which is called Sentinel. And what that allows a credit union to do, and we have a credit union that's literally working with this with their frontline staff. When a member comes into this credit union, any of their branches, the teller can literally pull that member up on Sentinel and see what's happening in their financial lives. It's orchestrating all of the data from disparate sources, account information, loan information, and transaction data analysis to surface what's happening in that member's life. So you can see if someone's if something's trending in the wrong direction financially. It empowers staff members to have a more meaningful conversation with that member about what's happening. Now, that could be as simple as someone who's coming in for a bi-weekly visit to the branch because they're old school and they want to come have a conversation. It's telling them what's available to them. Or it could be when you're looking at someone who's in their first 14 days of delinquency from a loan that they have at the credit union, understanding what's driving that potential delinquency so the credit union can be proactive instead of reactive in offering a solution. Because some of those early delinquencies, it's someone whose paycheck doesn't necessarily line up with the due date of the loan. And so we've seen instances where they use Sentinel to see, oh, this person is consistently 5 days late on their loan payment because their paycheck timing just doesn't line up with when the loan is due. Making that adjustment for the member can make a big difference in their lives and lower their stress while still getting the credit union what they need in terms of on-time payments.
Now, when I came across your guys' program, it sounded like there was some value there, definitely. And one of the things that I'm always trying to do is finding ways to, be more of a service to our members. One of the things that kind of came to my thought is I don't really know if this would fit well with my membership. So, what types of credit unions, size, membership base, tend to see the greatest success with this model?
Yeah, so our smallest credit unions are around a little less than 150 million in total assets. Our largest credit union partner is several billion. So it kind of runs the full gamut in terms of asset size. We've got a CDFI credit union.
Well, I
We've
wasn't
got
thinking so much asset size. I was thinking more, membership base, a community credit union. What types of credit unions seem to have had the greatest success? Um, we're a closed membership base, so a lot of my members are more apt to paying off. Literally, I have members that are, coming in, taking money out of their account to pay off, or transferring to pay off a mortgage because they're getting ready to retire. As we're trying to get a lot of the younger members, but I guess have you kind of targeted, like, what's the sweet spot type of credit union that you would be talking to?
So there's really two tracks, is what I would say. The first track is the track of a credit union that is looking to better engage younger members, attract and retain younger members. Um, they've already seen in their data that they're losing these members, and they're losing these members And one thing they see in their transaction data is some of these alternative finance providers giving their members microloans before they churn away from the credit union. So we see one track of credit unions where they're saying, I want tools so that I can go to market to the Gen Z potential members in my community and say, we can offer all of the things that you're finding online, but we can do it at an organization that is designed to help you because we're not for profit. That's kind of one track. So it's attract and win Gen Z members. The other track that we see is credit unions that are focused on their young members, but are also focused on the underserved members of their community, people that may be credit challenged, people that may just need help. At one credit union that we work with in the New England area, one of the things that we've been surprised by is we've seen, we think of this 88% of Gen Zs and millennials in our data are the microloan borrowers. It's highly disproportionate to younger members, but this credit union's actually seen a surprisingly high number of Gen X members making use of this product
Really?
for different reasons. Yeah, so for them, it's a New England credit union. It's winter tires. It's HVAC
Oh,
repair. It's things that pop up in normal life, but because they have
sure.
access to this solution through their credit union, they're taking advantage of it. So it's actually an unintended benefit for that credit union that not only are they engaging their young members, but they're re-engaging and more deeply engaging some of their Gen X members that are looking for products like this as well.
Now, I know you're talking with credit unions on offering this to their members. If credit unions don't step into small dollar lending space, who will, and what does that mean for the future relationship between credit unions and their members?
Yeah, if you look at what's happening in the marketplace today, what you see is a lot of digital neobanks have identified small dollar lending as an incredible tool for member acquisition and retention. And you don't have to take my word for it. Chime, publicly traded company, Dave, publicly traded company, Cash App, which most people would think of as a banking competitor, they would think of it as a peer-to-peer payments provider because that's what Cash App started at. Cash App has over 8 million active members that are depositing their paycheck into their Cash App account, and they are converting them into banking customers. And all three of these competitors, which combined have 17 or 18 active members, which would make them the largest credit union in the country by membership, they all say the same thing. We use short-term liquidity products to solve a member's most pressing need, which is short-term liquidity. And once we've done that, we can build a primary banking relationship and we can cross-sell other products at really high attach rates because now we have the direct deposit relationship and we're the place that they go to first.
Yeah, I think you definitely over the course of our conversation have kind of opened my thought process a little bit further. I was kind of a little I wanted to get your information out because it definitely sounds like something that is warranted within the credit union space. Initially, I wasn't exactly sure if it was something for us to take a look at, but honestly, in the the last 20, 25 minutes we've been talking, you've really kind of opened my eyes to taking a much closer look at it. And so, if anybody tuning in, listening to us, if they wanted to get more information, James, how can they reach you? How can they get more information?
Sure. The best thing to do is you can reach out to me at James at salusfintech.com. That's JAMES at SALUSFINTECH.com. You can find me on LinkedIn. You can find us at salusfintech.com. There's a contact us button right at the top of the page. Would love to talk to credit unions that are interested in winning Gen Z.
All righty. Well, hey, I appreciate you coming on and look forward to talking to you even further and networking within the credit union space.
No, that sounds great, Greg. Thank you for